There we go. I want to jump in. So this morning, for the, well, this is not the 29th. Let me fix that. There we go. That's for the 29th. I'm still holding on to this yields and indices slight divergent short term, which, has me on this bullish bent. But there was a down close in the daily wicks. So I saw, and this leads to my error actually, I saw clean lows in the context and two friendly pivots above us. So with Thursday's candle development, I kind of thought we would see more downside, really. And in that way, I focused on price being in premium and wanting to sell and looking to take out those 15-minute clean lows. So really, it was kind of a go up to go down situation. That's what I was thinking. Now, the three best trades of the day were the 932 fair value gap pullback long, the 956 propulsion block long, and then the 1112 order block pullback long. 3 daytime features. We've returned to premium and cleared an old high. We left a higher low on the daily, and the profile, rather, the market structure profile. And then there's an inside period on the weekly, which is giving the indication of balance. So with this run up today, I would expect tomorrow AM would be balance, or the AM would balance and it would retrace in the PM, or expand in the PM. So with that in mind, I want to dig in to how we got to today. We had I still believed we were reaching for the low. And the interesting thing is, and this is the point that I want to call out, I can go through all of this, but really not because the day turned out to be bullish, but because today I came in and was ready to give up on the bear side, say, hey, look, clearly the we're not going lower. What happened was I actually made an error in my judgment, and I want to point it out. And what that did is that forced me to get fixated on that target, and then I arranged a narrative to fit it. Is what happened. So I saw that the market was reaching for the previous weekly low. I thought that was reasonable. I had my currency interest rates showing conflict, which is not necessarily a bias, but it's just saying something is happening, which I was using that to formulate a bullish bias. And prices were at equilibrium on the day time frame, roughly. This is where the narrative started to shift, because on the small time frame, I'll show it to you, I started to develop a target. I got focused on a target. So I said, well, we're in a body of a bear candle, meaning that we should continue to go lower. The daytime frame breaker had been tested and rejected, tested high and then coming back lower, being yesterday's sell-off basically. And this is where I really can see that I just wasn't following things as closely. I was just kind of like plugging in the information rather than really meticulously thinking about it. Then we got into the 830 unemployment number, and I said, okay, that should probably generate a move. And then, because the bias was basically set and I wasn't really thinking about what the market should do, and I'll show you why this is a process error, not a trader error. Everything that I'm doing here is basically affirming the low, affirming a short sell. But the optimal entry, I was saying, is a test of the liquidity void above on the 15 minutes. So I'm basically saying the market should go higher, but everything I'm saying in my context is about going lower. So what am I doing? I'm actually confusing myself. So let me pull this into the charts and show you really what I ought to have done. Okay, currently you're looking at the daytime frame, the 15-minute, and then the 1 minute. So I'm going to just get on the daytime frame here and point out that when you look at where we are on the daytime frame in terms of the market profile, we have tested the equilibrium and bounced off of it. Now, consequent to that, this close here, this down bar of yesterday, closing into these wicks made me think, we should probably go lower. I didn't even think we should have gotten as far as we did. But realistically, there's no reason why we couldn't be testing all the way down to here. So this was that was a false conclusion. This is where your bias starts to get shifted because of what you think a target is, or you overly prioritize one piece of information. And I have a tendency of doing that. where I overly prioritize a small time frame piece of information. So here's how I should have done this. I don't know why I keep pressing that button. There you go. You start on the 4 hour and you look at the context of what's going on. Largest swing. Where are we in terms of price action? We're down in discount. So do we want to be selling in discount? No. This is what I saw in the morning. I saw this target right here and I said, oh yeah, I bet it's just going to pop up here and right back down there. And why? Because of this close. Because of the bear close. That's why. Or well, I guess it would be this close. But here. So I got fixated on selling in discount. Now, do you want to sell at a discount? I don't want to sell at a discount. Nobody should want to sell at a discount. You should want to sell at a premium. So I got focused on that and I saw this and then I started zeroing in. And because I wasn't looking at this range of premium and discount, I started zeroing in. I go, oh, okay, here's a pullback pivot. That's good. There's a pivot. And here was that liquidity void that I was telling you that it would probably push up into. So we're way down here in the pre-market. And I think it's going to go up here, but I'm like, yeah, but it could go fast. And I don't want to get long into that because blah, 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 blah. Because my context was wrong, because I wasn't focused on my process. So what did I do? Come all the way down to the 15-minute. I see the levels that I want to put on, and they look like this. Hang on. It's this pivot here with that fair value gap there, and then another one right above it right there. And so what did I do? I shorted levels. Best case scenario, you could say that one's right into premium. I should have waited, but I shorted that one and took a stop. Shorted again and took a stop and just got ran over, and then made a bunch of more errors coming up here thinking, oh, okay, well, now that it's run through this, it's going to run up here quickly and then turn around, kind of like yesterday afternoon did way back here on this low, or wherever it was, this low right there. So that's basically the dilemma, where you get too tight on time frames. And if you do that, wrong button again. There you go. If you do that, you're going to be bound to make a mistake. And this is, I don't know that I get long here. I may not have gotten long on any of these scenarios, but what I wouldn't have been is I wouldn't have been short, because I understood that I don't sell in discount. I want to sell in premium based on the parent time frame movements. So I'm posting this because I want to demonstrate that it's not, it's not really psychology. Psychology plays a part, but that's really when you started to lose control because your process has already failed you. Had I been in context and understood what was going on, there are certain things, certain choices I wouldn't have made, which wouldn't have led to the emotional control. I mean, I'm sorry, I don't accept a lot of the leading thought that you should be able to control yourself like a robot would. If you're experiencing pain and trauma and losing, and you valuing these things the way that you are, it's really hard to believe that you could maintain your emotional control. Most people can't. I would say all people can't. I don't know that anybody that can. So how is it that traders are good at trading? Well, they eliminate the number of things that can trip them into that area. And then once they get into that area, they have ways of walking back out of it before it gets too bad. And they have risk managers and things like that. So that's why we have to focus so much on process. So I'm posting this as a part of a demonstration of process management. I took every trade but one was a loss, and the one that was not a loss ended up being a scratch. So pretty bad day as far as results go, but pretty great day in terms of having this awareness that the issue wasn't my trade plan. The issue was how well I followed my preparation process, and the confusion I experienced in the morning and how that led to consequential errors. So reach out to me if you want to talk about your process.